every bear market, every bad season and time, in my opinion, is characterized also by a big financial institution that has crashed. I thought it was Terra Luna, but if you look at it, FTX was an even larger institution that crashed. But if you put all of the other things that were connected to it, from BlockFi to Celsius to Voyager, that entire connection of large financial institutions that were interconnected to each other, I think contributes to say that those were the large institutions that may have indicated the bottom of this particular bear market. I want to talk about how can you spot the bottom of the market, or at least have certain indicators or certain things that you could actually consider as clues and snippets on some indicators that, hey, maybe we are at the bottom already. I've received so many questions asking, are we in the bottom of the market already? Is the downward trend over? And I'm creating this video to be able to answer those questions, but I'm answering this not from a perspective that I have a crystal ball, because given that I've been close to 15 years in the stock market and 4+ years in crypto, you'll notice this the longer you are in investing, that no one has a crystal ball. No one can predict how low a market will go. No one can predict also how bad things could actually be or how good things could actually be. But there are certain things that we could find out from how certain cycles were in the past, in order for you to determine also, or look at it as a template to determine also if it's almost the same. Please do remember that investing, regardless if it's stocks, crypto, real estate, they all just move in cycles, or even the economy, it all just moves in cycles, meaning that there will be a point where it's dropping, there will be a point also where it's at its lows and it feels that it's not going anywhere. There will be a time also that it starts recovering and starts going up. There will be a time also where it just keeps going up, that you feel that it's not gonna fall anymore, but by the time you feel that also, that's when it starts to just reverse back down. And in a way also, people felt invincible in the crypto market when we saw Bitcoin hit 69,000, when we saw it push at the end of 2021. People were already saying that, oh, this is gonna hit 100,000, it's gonna go to the moon. But when everyone felt that it was invincible, that's when we saw weakness. That's when we saw a reversal of its upward trend. That's when we saw massive dumps. That's when we saw also people take profits as well. Now, that being said, I want to talk about 5 things that you could look at to help determine if we are at the bottom or not. And I'll say this also, similar to the collapse of FTX, every bear market, every bad season and time, in my opinion, is characterized also by a big financial institution that has crashed. I thought it was Terra Luna, but if you look at it, FTX was an even larger institution that crashed. But if you put all of the other things that were connected to it, from BlockFi to Celsius to Voyager, that entire connection of large financial institutions that were interconnected to each other, I think contributes to say that those were the large institutions that may have indicated the bottom of this particular bear market. But number one for me is you can look at the volume, or volume analysis. What do I mean by that? A decrease in trading volume often indicates a lack of investor interest and can be an indicator of an approaching market bottom. Please do remember that when people are scared, when there's no good news, when everything seems all bad, when it seems that it's just the end of it, people don't want to invest. And that's the time also when smart money comes in. That's the time when a lot of people who have cash, have liquidity, who have seen markets in this cycle start to come in and start to quietly position. Check out how volumes are. Compare it to when the market was bullish. Compare it to when everyone wanted to invest, when everyone wanted to come in, versus a season and a time when volumes start to dwindle, or a season at a time when there's prolonged trades that are very, very low. That could be an indicator already that the market is starting to bottom out and a reversal is coming in soon. Number 2 is trendline analysis. This is highly connected already to technicals as well. Plotting the trend line of a cryptocurrency or a stock price for that matter can help you determine the support level, which could be the potential bottom of the market. I've created several videos on this, but you can look at particular cryptocurrencies and stocks that are in downward trend lines by connecting the highest point when it started to reverse down to where we are. As long as the trend line is not broken, then we are still in a downtrend. Because the longer the trend line, the longer the resistance, the stronger it actually is. The longer the trend line, the longer the resistance, the harder it is for it to be broken. So as long as the trend line is solid, there's an expectation still that the downward trend is still intact, the bear market is still intact. But if that trend line gets broken, then we have indication of buying, we have indication of more people positioning, and we have at least a glimpse that a reversal may be coming as well. So number one is volume analysis, number two is trendline analysis, the number three is moving average analysis. A moving average is a technical analysis tool that can help you determine the trend direction of a cryptocurrency. If the moving average is sloping downward, it could indicate that the market is bearish and reaching a bottom. But what I'll indicate here is this: similar to trendline analysis, you just wait up until the candlestick pushes above that moving average. And if you want really a bottoming out, it's very important to use longer moving averages, like the 200-day moving average. Similar to a trend line, the longer it is, the stronger it is as well. So what I want to submit to you is this: use a moving average. It could be a 100-day moving average, could be a 200-day moving average. I personally like the 200-day moving average more. As long as it's below that line, the market, the stock, the crypto that you're watching still is bearish, still hasn't reversed. Wait for it up until it crosses above that. If that coincides with the trend line, even better, because it coincides also with our second topic, trend line analysis. So if you want to put this together, if a stock or a crypto is in a downtrend with volume getting lower, as it's lower, suddenly it breaks past a trend line and a moving average with strong volume. That could be an indication that it's bottoming out. So if you notice it also, the first, the second, and the third things that I've mentioned are mostly technical analysis, because what's nice about technical analysis, it tells you about sentiment and it tells you how people are reacting by the way they're actually buying. And if there's one thing about price, it's more forward looking than any economic indicator that you could possibly have as well. Number four is this: you could look at market sentiment analysis. What do I mean by that? Market sentiment is pay attention to news and social media discussions around a certain cryptocurrency or a certain stock. A negative market sign can be a sign that the market is reaching its bottom. So I'll give you an example. In 2008, when the market crashed massively, when Lehman Brothers closed down and filed for bankruptcy, when there were more negative news that were coming out, more companies that were actually closing, and people were saying that this is the end of capitalism, this is the end of the markets, things are not going so well already. If you look at the charts, they were just about to reverse already. It didn't go down lower anymore. And I think that could be a sign also. The more negative, when you see more people telling you stay away from cryptocurrencies because it's bad, stay away from cryptocurrencies, don't touch Bitcoin, gold is better, it's not, cryptocurrencies are bad, it's gonna go to zero, it's gonna crash. When a asset is battered down, that's when the bears are at the loudest. That's when they scream the most. But that's a time also that, hey, it may be bottoming out also. In the same way, when a market is toppish, you have a lot of people that are not into cryptocurrencies suddenly talking about cryptocurrencies. You have a lot of people who are not into stocks talking about stocks. You have a lot of people that really don't know anything about it, but they're FOMOing into it. That's an indication that it's a bit toppish. So flip that for markets that are bearish and are bottoming out. When the bears are at its loudest, that's when it's about to reverse upward. That's when maybe we are at the bottom as well. And lastly, you could use Fibonacci retracements. Fibonacci retracements, similar to the first, second, and third points, are all technical indicators. A Fibonacci retracement is a technical analysis tool that uses horizontal lines to identify possible levels of support and resistance in the market. If a cryptocurrency reaches a key Fibonacci level, it could indicate that it has hit its bottom and it's ready to reverse in its trend. Watch out for support levels that, as a crypto or a stock hits that level and it doesn't fall anymore, it stays at that level, it holds. It means that there are people who are buying at that level. The reason why it's not dropping anymore because people think that it's already cheap. When people think it's already cheap, when people buy, it doesn't fall, it doesn't drop, and it forms a base already. It could just wait for just possibly a positive news, a positive disclosure, something that changes in regulatory framework, lowering of interest rates, inflation going down as a trigger for it to cause other people to buy higher. But always pay attention to support levels because as those support levels are holding, it means that people are buying already at that particular level, and that falling or the downtrend or its continuation of it going down may be over as well. So just to summarize everything that I said, how do you look for bottoming outs of the markets? You could use volume analysis, you could use trendline analysis, you could use moving averages, you could use market sentiment analysis, and you can use Fibonacci retracement analysis as well, or aka just looking at the support level if it's holding. I'll keep you updated also on how the markets are on a regular basis. So if you want to be updated, like, share, subscribe. It costs you nothing. And if you have questions, put it down below because it also helps out the YouTube algorithm and it helps me to make videos that you guys like as well. And that's the reason, that's the main narrative on why I keep making videos like this. I want you guys to be educated in a way that will help you to make wise decisions when it comes to the crypto and the stock markets as well. So that's it for now. If you want to know more about me, links are down below on the books that I've written, the videos that I've made, and the webinars that I have as well. So that's it for now. This is Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.